What is up, guys? We have finally made it to the last video of the 5-video strategy series, and this one is going over trade management, how to manage trades once you are in them, right? So pretty much in this one, we're going to be going over my break-even system, take profit, stop loss, trailing stop loss, and SMT, and how I approach it all. So let's get right into it. Pretty straightforward. But so pretty much first things first, I will go into the break even system because it is very important, because as a continuation trader, right, you are essentially catching the expansion move, right? So if we ever kind of have a point of rejection within that expansion move, that is not a trade you want to be in, right? So let me just show you exactly how I manage my trades and I go break even, because I do have a pretty straightforward break even system and it looks just like this. So let me show you, right? So you're seeing here, your drawn liquidity is this low right here. You want to target this low, but overall, you right? Okay, so overall, you want to target the low and you take your entry here. This looks like a pretty good entry, right? Boom, displacement, retracement, displacement, cool, cool, cool. And here, I'll just go over the first one, and then the second one looks pretty similar as well. But you'll kind of see the trend here, right? So boom, you take your entry off the displacement, and then what do you see here, right? You see, like, in order to put in a retracement leg, what we need to do, we need to put in an internal low or high in the markets, right? Because we're not gonna just retrace with, like, you're entering off a flip in the market and then you're trading back down to that flip in the market, right? So you're obviously always going to have an internal low and internal structure that you're able to see when your trade is playing out, right? So with that in mind, when you're entering off the displacement back towards that internal low, you can use the internal low to gauge and kind of manage your position, and it gives you a very good tell on whether your position is going to run to your drawn liquidity, or it might reverse and stop you out. So this is the most crucial thing that's going to tell you whether to go break even or not, right? So that is why I use it with my break even system, and it looks just like this. It is super straightforward. It is literally, it's like, this is the only mechanical part of my trading system. So whenever we hit the internal low, not get close to it, not just flush past it, whenever we hit the internal low or internal high, I move my stop loss to break even. So why do I do this, right? Why do I do this? I do this because if we were to reject that internal low, then obviously that trader is going to be way less probability. And I truly believe, and I've seen it happen, and I have stats over time showing that more times than not, if we reject the internal low, you will save yourself from a loss more times than not, where we go back to break even point and then continue going back to the drawn liquidity, right? Because as a continuation trader, you want to see price flush past that internal low or internal high, right? You don't want to see us reject and slow down once we hit the internal low. So it makes sense to mitigate your risk once we hit that point in price where we are vulnerable and could flip and reject, right? So it looks exactly like this. And this was two examples where it fully did do exactly what I said, and it did, and would stop you and it would save you from a loss, right? So as you see here, boom, entry one off this displacement, we reject the internal low, and what do you see? Boom, we do not deliver to the drawn liquidity, right? So boom, saves you from a loss. And then entry two here, let me just delete this, and then entry two looks the exact same. Boom, let's say you want to retry shorts, you get your entry there, and what do you see? Boom, we reject the internal low, and it saves you from a loss. I promise you, you might get greedy, you might say, oh my gosh, I need to hold this trade. I promise you it will save you more times than not. So whenever we hit the internal low, just mitigate your risk, because if we do reject that area in price, you no longer want to be in that trade because you are aware it is less probable. You want to see price flush past the internal row, like flush. And I obviously will find examples of price flushing and what that looks like. But this is pretty much, it's not complicated at all. You take your entry, and because, right, you're entering off a retracement, so in order to retrace, we need to put in an internal high or internal low in the markets. And once price re-hits that internal high or internal low, you mitigate your risk to break even. And this is why it is also why it is such a high win rate system, right? You are not taking a lot of losses within this trading system. So first things first, that is the break even system. Now take profit, it is very straightforward. Because I have this kind of break even system, I just full take profit. I never take partials because typically I'm in trades with like one mini or two minis, right? So I don't take partials. I just full take profit at the drawn liquidity. And I obviously just mitigate my risk at the internal high or internal low, right? So I mean sometimes let's say boom, like price is trading here, you're in shorts here, or whatever, like you're in shorts, your take profits here. Sometimes I'll just put my take profit a few points above the actual level just in case of some weird edge that goes on. Like it's never worth risking the extra half a point, the extra point to get that like extra $100 of profit. It's never worth it. So more times than not, I'll just put my stop loss a little bit above the actual draw liquidity just so I get filled and make sure that fills me. But pretty much, I just full take profit out the draw liquidity. Yeah, I just full take profit out the draw and then stop loss, right? So I've pretty much already been over this, I feel like, in prior videos. But your stop loss should always be where the trade idea is invalidated, right? I feel like I kind of covered this in retracement and why it is so important to wait for a retrace, because if you don't wait for it, right, your stop loss is probably in an area and price where the trade idea, where price could go to your stop loss and the trade idea is still valid, right? So the biggest thing is your stop loss needs to be in an area and price where the trade idea, where if price goes there, it is fully invalid, right? So like, let me find an example here. Perfect. Okay, so let's say you want shorts right here. Cool, you're entering off this displacement lower and your stop loss is at the swing high. Boom, you're targeting lower prices like this. See, because like when you're entering off this type of displacement, right? So when you're entering, because this is a volume-based system, you're entering off volume to the draw. And then obviously I know this is not really a continuation, but I'm just showing this as an example, right? So you're entering off volume in the markets to a objective in price, a high or a low, whatever. So you are fully expecting price to continue pushing in that direction with that same volume. So it would not make sense for price to go all the way back up and slow down and fully reverse back to this swing high and retake this swing high and then deliver, right? Like that should not happen, right? So always just place your stop loss where the trade idea would be invalidated, right? Because if you rock your stop loss like right here, like like you could easily get wicked out of this trade and the entire move still plays out, right? Like we could easily do this. Just throw a quick wick up into this gap here, stop you out, and then still deliver, right? So just make sure it is where the trade idea is fully invalidated because, right? Because yes, like we could have a little wick up and the trade idea could still play. But if we have a huge leg up and resweep this high, that probably shouldn't happen. That probably should not happen, right? And we'd probably continue going to this high right here. So that is stop loss. Just make sure you're not cutting it too close, because this was a mistake I even made. I tried to get too kind of cheeky with my stop loss, get away with risking little, and I promise you, bro, like you're just gonna get losses, 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 because I would literally watch price stop me out and then still deliver it. I'm like, all right, bro, maybe I should just man up and just actually place a stop loss where it is invalidated and where it's meant to be, right? So it is just always place it where you know you should be. Don't ever try to cut corners. It's not worth it, man. And then trailing stop loss. I rarely ever use a trailing stop loss, but let me try to find an example of where I maybe would. But so really the only way I trail a stop loss is, you guys know, like I said in previous videos, how I will really only enter with a relatively shallow retracement if we have a lot of volume. And in that case scenario, right, sometimes you don't have that internal high or internal low to gauge price to go break even at. So sometimes I'll just trail, right? Like in this case scenario, boom, let's say you're in longs right here. Cool, cool, cool. We're in longs. Or okay, so let's just say you got a really bad fill. So let's just say you got a really bad fill on this long and you entered relatively close to your break even point, which would be the internal high or low, right? So pretty much how I manage it, and I kind of just trail it as price like makes sense. If that, yeah, I'll kind of show you, right? So boom, I enter here, and obviously if you go break even literally within 2 points of the internal high, you're probably going to get a break even on that trade, right? Obviously you want a fill like this down here, but let's just say you get a fail close to the internal high. How do you manage that, and how do you kind of manage your risk within that, because you don't have that mechanical way to go break even, right? So pretty much how I look at it is essentially like it's the same thing, but like two retraces, right? So boom, you get that initial leg up, and obviously you are in jeopardy of getting immediately break even. So I will go break even once we resweep the high of the kind of quote unquote second retracement, right? So you see it here, boom, we get that leg up and we kind of retrace to your initial fill because you got a pretty bad fill on it. We retrace there, and then the second we re-sweep that high that we put in the secondary retracement is when I will trail to go break even, right? So pretty much this is a rare case scenario that happens because pretty much every single time I do have an internal high or internal low to break even at. But in the case scenario where you do not and you're just having to mentally gauge price and look at it, I will always go break even after we resweep the high of the quote unquote second retracement, and it looks just like this, right? You see, boom, you take your first entry here, we give that kind of second pullback, and then the second we resweep that high, that is when I'll trail to go break even, right? Because we shouldn't really reject this high and then go lower after we already put in this retracement, right? Like this area in price should hold. So if you reject it, right, you're pretty much just saving yourself from a loss. So that's pretty much how I manage positions where it's kind of frisky in terms of, oh my gosh, should I go break even now, or whatnot. So that's just how I manage those. And then SMT. I don't have ES up, but I don't really need to. I'll just literally just throw on a quick diagram. So boom, we'll say here, we'll go boom. This is ES's draw, and this is NQ's draw. Let me just write it out. Yes, NQ. Cool. Okay, so pretty much how I approach SMTs is I don't trade SMTs. Well, I do. Forget what I just said. But pretty much, so let's say ES is the more bullish index, right? ES is closer to the drawn liquidity, and NQ is farther away from the drawn liquidity. NQ is down here. ES is obviously way closer to the drawn liquidity, and you can visibly see that ES will take the drawn liquidity before NQ. What I will do is I will just simply trade the leading index. I will trade ES, right? Because what is the point of trading NQ when you know damn well ES is going to take the draw first, because now you're sitting there with your thumb in your ass saying, oh my gosh, should I hold my position? Should I hold my position? What should I do? When in reality, you can just trade the leading index. So what I do, if I blatantly see ES or NQ is leading and I know it's going to take the draw liquidity first, I will just trade the leading index. So I don't really have to worry about SMTs that much because I'm always in the trade on the asset that is leading and is going to take the draw liquidity first. So that is how I approach trading the different assets and SMTs. I'm not typically an only trade NQ and then I just have to manage like with SMTs. More times than not, I'm always just in the position on the leading index. So that's how I look at it, because in my opinion, it's obviously very frustrating if there's like a huge SMT at the draw. So what I do is I just fully eliminate that factor and boom, I just always trade the leading index. But there is a case scenario where it's not your draw liquidity, and let's say ES takes the internal low or internal high, that is your break-even point. That is a different case scenario, right? Because obviously that can happen because on lower time frames, like the assets can definitely fluctuate. So boom, let's just say this is. Hold up, let me just do two more full drawings here. So let's say boom, this is ES, and ES takes your internal high and NQ, and you're in the trade on NQ, and NQ has not, right? So boom, you're in this trade right here. Sorry, you're in this trade right here, and you want to see draws higher, but ES SMTs at your internal high. So I treat it the same exact way as NQ, right? So if ES SMTs at the internal high, which is my break even point, I will mitigate to break even as well, right? Because that's like the last thing you want to be in a trade where boom, we obviously reject the internal high SMT and you're sitting in the trade like, fuck, I'm probably gonna get stopped out now. So I treat it the same exact way as if NQ took the or if ES or NQ took the internal high, SMT on either side. I will just always mitigate to break even. So pretty straightforward there. But yeah, that pretty much covers everything, I believe. Went over break even, internal high, internal low, very straightforward. Take profit. I full take profit. Your stop loss should always be where the trade idea is invalidated. Do not try to cut corners. It is never worth it. You're going to get stopped out. If you place your stop in a place where we could still go there and still deliver to the draw. Trailing stop loss, the slight case scenario where you're in a position where you don't have that internal high, I pretty much I showed you guys, I mitigate when we kind of resweep that secondary internal high. And then SMT, I will always look to trade the leading index. So I don't get SMT'd, but let's say I'm in obviously like I'm on a 1 minute entry time frame and ES takes the internal high, then I will also trail to break even there. So I don't really know, like there's not really much to backtest here because the prior 4 videos I've been backtesting. Um, but you know what? I'll still do it. This video is 15 minutes long. I'll do like 5 minutes, 5-10 minutes, and pull up a few trades and whatnot. So let me do that right now. All right. So just gonna show you guys like one or two trades and how I manage the trade, take profit, break even, and whatnot, and just kind of show you different situations. So I have April of this year pulled up, and let's see if I can get some good examples for you guys. Go to next day open. This 9:30. Bang. Okay, so let's see some draws on liquidity. Wow, overall bearish. Very, 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 very bearish. We have a low here. Cool, cool, cool. Bang. Hourly. Very bearish. All right, I'm just going to scale down to the 1 minute because obviously we're delivering to that low. So let's see if I can get an entry to that low. Wow, maybe we just rocket off market open and edge the low. Fire. Fire. Maybe a session high or something. Not really seeing much. Not really seeing much in terms of draws higher, but I'm just going to mark out these hourly highs up here. Possibly an entry. Yeah, this is going to play out, but literally negative RR. You know what? Okay, this is actually a different example and something I didn't go over, right? So let's say you have a overall decent draw and then you have an even stronger draw and liquidity higher, and your entry is kind of showing up just before that. Typically, what I do sometimes if it's like an A plus trade like this, and then I'll just take the trade and then just go break even at that kind of first draw and just hope and pray we flush higher to the next draw on liquidity and just continue trading with that same exact volume, because obviously you see this is like an A plus setup to kind of this first draw here, but it's negative RR to it. So what I'll do sometimes is just go break even at that first draw and then just target the second draw. So let's do this here, um, and see if we do get away with it. Okay, see, it's like this, this is what I'm saying. It's like such a quick break even, and more times than not, you do get break even, but it's like an A plus entry, and if you do get away with it, then boom, you catch a nice trade, right? So let's see if we do here. Oh wait, nah, break even here. But yeah, so pretty much that is kind of the case scenario where if you do like this is only the case scenario if you do have a secondary strong draw. Only if that. Like don't do it if you're just targeting like a little bit more kind of just thin air drawn like RR. Just only do it if you actually have a secondary draw higher. So break even there. But let me just go to the next day. Whoa, what in the world? Dump of doom. Dump of doom and despair. But we have. What do we got? What do we got? What do we got? We do have 4-hour low here. Okay, okay, okay. We have. Looks like an edged 4-hour low right there. Okay, okay, okay. Respecting nothing on the hourly. Respecting this huge big sell off there. But respecting at 15, respecting at 15. So pretty much I am open to just seeing displacement on the 1 minute off open. Like if we get something like this, literally off the opening candle, I'm going to be in shorts. Boom, I'm in shorts. Come on, man. Come on, man. Let's see if we continue going higher. Nothing really clean, to be honest. Nothing really clean. Probably gonna deliver though. Yep. Possibly we get an entry to this kind of secondary 4-hour low, but this not really clean. No real big gaps, obvious gaps being created. Overall, trading in this pretty range here, not really trending anywhere. So now it looks like we are possibly breaking out to the secondary low. So maybe we can get an entry. Flip, flip. No, wow, 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 wow. Dang, maybe we edged it. But you guys see here how literally none of these flips invalidate this retracement leg. So like if you ever try to catch yourself trying to force this trade, well, like just tell yourself, okay, this retracement leg right here has not been invalidated yet, right? So I'm simply gonna wait until boom, this retracement leg is invalidated, and then boom, all short. But until then, I'm not gonna want short. So if you were thinking of kind of just pre-firing any one of these, just think to yourself, okay, is the retracement leg we put in invalidated yet? No, so I'm not gonna take that short, right? But looks like we edged it here. Maybe we take it overnight, but I'm just gonna go to the next day because it's like 1 p.m. right now. I just want to get kind of one trade in for you guys and show you guys how I manage it. It looks like we took the draw overnight. Is there anything lower? Yes, we do have an edged 4-hour low right here. Come on, man. There we go. It's a little bit higher than that. Pretty much like an edge low right here. Overall, very bearish, respecting a hourly, a 15, 5 minute. I mean, bro, like again, if we get displacement like this, I am willing to get in this trade because pretty much already everything has aligned pre-market. We're respecting an hourly gap. Pretty much already have a pretty strong draw on liquidity lower. So, and we're already trending to it. So if we get pure displacement off open, I'll be willing to take this trade. That is not displacement. Maybe we get a 5 minute. Okay, what time? If this is okay. So this was a 5 minute close, and I'm just gonna play a few more candles. Come on, man, deliver for me, twin. Dang. I mean, this was the only entry here I was kind of thinking this was relatively clean, but the only thing I didn't like about it is how we already rejected this point like once, twice. Like, okay, you see here, boom. Hold on, let me just, it looks better on the 1 minute. You see, boom, here, like we rejected this area and price twice now. You see, boom, right here. Uh, ready? Rejection, rejection. So I am not really going to want to take a short in an area that we have already rejected twice. So I ideally wanted to see a kind of boom, like a retracement right here and then flip, just because of the fact that we have already rejected this area and price twice, and I just don't want to, again, short in an area that is vulnerable to get retraced on and overall reverse, because I'm just going to wait until we confirm past this area that we've already rejected twice, and then we just didn't really get that proper retracement there. So I'm going to go to the next day. Hopefully I can get a good example for you guys. And then that will pretty much be the series. So let's see if we can get, okay, we have a new week opening gap. Okay. We have, looks like session lows, already displacing towards the session lows, already respecting the new week opening gap. Okay. Let's see if we get an entry to it. Let's see if we get an entry lower. I want lower prices. Holy reversal of doom and despair. Okay, maybe we get a new week opening gap fill. Okay, this 15-minute close is beautiful. Beautiful. But the only really draw we have is this new week opening gap fill. So let's see if we get an entry to it. Because right now, if we can go like this, boom, I'm in that. I'm in that, John, please. Yeah. Nothing really I love there. Again, right? Like this is pretty much just us. Like in my opinion, it's just entering off really overextended price, right? You see here, like, is it really worth it entering all the way up here when it's literally negative R? No, like we are price is blatantly overextended, and holy volume and price, 140. Wow. Okay, we have a lot of volume. But right, we are relatively very overextended, and it's not something I am willing to put risk on just when we can actually, in my opinion, give a deeper retracement like this and then flip there. So one more day. Let's see if we can get a freaking good example for you guys. Go to the next day. What are we looking like? What is the DAC looking like? Okay, wow, we have a very prominent data high. Very prominent data high. Did we already sweep out the data low? Okay. Oh my gosh. Oh my gosh, this I remember this day. This was the day where we literally had 100-point candles. Hold up, this was like when Trump was speaking, and we literally had like 100-point candles. I kid you not. Let's see. Okay, let's see what this. Yeah, holy shit. 471 points for two 1-minute candles. I remember this day. Oh my gosh, this day was insane. We had like a 1,000-point move in like 5 minutes. 1.6k points on the DAC. Oh my gosh, I remember this day. This was insane. Oh my gosh. But let's see if we get longs back to that high. That was insane, man. Okay, let's see if we get longs. I can get a final example here for you guys. Retrace now, my boy. Yeah. Obviously, you guys, all you see is wicks and literally no gaps being created, so I'm obviously not going to trade there. But I do want to get an example for you guys, so I'm just going to keep playing candles until I can get a decent example. I don't really care if it's 2 drawn liquidity. I just want to show you guys of how I manage a trading going break even and whatnot. Okay, so I'm just gonna take this here. There's no real strong draw, but this does look like a pretty nice flip. So I'm just gonna play this and tell you exactly how I'd manage the position. Bang, bang. Hopefully, it doesn't just go straight to stop loss, but I just want to just show you guys how I manage it. Bang. Okay, so let's play one candle here. Okay, so in my opinion, this is a case scenario where it's relatively close, and like in my opinion, it's relatively close to the internal low, right? And I do believe price could still go here, and we could still hit this gap and still deliver lower. So in this case scenario, this is where I kind of trail a little bit, and I'm not going immediately break even here because, right, like in my opinion, this has like a 80% chance of getting break even. So maybe I'll just trail like a little bit to right here, because I still think price could still trade into this gap and then still deliver. So let's play one more candle. So pretty much, if we once we resweep this internal low, that's when I'm gonna go break even. Okay, I'm gonna go break even here because we reswept that internal low, and I'm more than likely gonna get break even. Yeah, and saves you from a loss. Point proven. Point proven. Right when you mitigate at the internal low, it saves you from a loss more times than not. But I need to get an example where we flush it and go to the draw liquidity. But here, I'm just gonna go to the next day because I need to get an example where it's an A plus flusher. Maybe we do here. Okay, we have an untapped hourly gap. Maybe we get it here. We're putting in a retracement right now. Can we get it flush lower? Some displacement. Displacement, please. Okay. Bang! Okay, so this is beautiful, beautiful, beautiful. Okay, so this is actually a very clean trade. So boom, you're in shorts here. And this is actually where we have room before the internal low. So, oh my gosh, can I place my freaking tool? There we go. Okay, so bang. Shorts right here. Targeting this untapped hourly gap, hourly low. Bang. Place order. Bang. 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 All right, now let's play it out. Bang, break even at the internal low, because if we reject at this point, then I no longer want to be in this trade, brother. So this is where I would want price to flush. Please, NQ, flush for me and show my audience an A plus example. Fucking hell, bro. Man, that is frustrating. I'm going until I get a beautiful flush for you guys. I don't care. I'm going until I get a beautiful flush. That is so annoying. See, those are one of the case scenarios where it is very frustrating where we do stop you out and it still delivers, but I promise you, more times than not, it will save you. But, okay, we're still displacing lower here. Do we have anything lower? Boom, stacked hourly lowest. Bang. Bang. Let's see if we get an entry. Please, please, please. NQ, give me some, man. Okay, so this is one of the case scenarios where we literally just displace past the internal low, and ideally you get an entry within here, maybe on like a 30-second or something. But obviously with backtesting, you cannot gauge it in live time. So I'm going to keep playing candles here. Man, that is so frustrating, bro. So frustrating. This is why I hate backtesting, because this shit happens and you can't actually see it in live time. Oh, But okay, but right, like I'm never gonna enter a trade when the 1 minute candle looks like this. We literally put a wick into the internal low. I will never enter a trade in that case scenario. Like that is vulnerability to the max. Entering when we have wicked an internal low already. I will never take a trade like that. Um, but I mean, I think we just took out all the draws here, unless we get an absolute flusher. I've been on this day for like 10 minutes, bro. I doubt we continue flushing, but who knows? Who knows, brother? Who knows? Son, give me an entry. Okay, okay, okay. Yo, what is up in April 2025? We are just, oh my gosh, I can't click. There we go. What is up in April 2025, man? Clean AF. Clean AF. And holy volume. That is unreal. Please give me a good example, NQ. Pretty please with a cherry on top. Pretty please with a cherry on top, NQ. Pretty please with a cherry on top. Oh my gosh! Oh my gosh! All right. Again, saved you from a loss. I'm proving my point, but NQ, can we deliver, please? What is going on? What are these wicks? Yo, I'm sorry if you guys are watching this, but I'm just gonna keep going. I don't really care. Next, guys, a beautiful example here. Obviously, we're gonna go down and take out this low. Now let's see if we can get an entry. Please, NQ. Okay, boom. Perfect. Perfect, perfect, perfect. So what am I seeing here, right? Well, what am I seeing here in order to enter this trade? Boom. We see overall very bearish structure. Overall, boom, respecting this new week opening gap, new day opening gap, very strong rejection. We swept out a data high, respecting a 15-minute gap, obviously displacing out of the 15-minute gap. Pure displacement on the 1 minute time frame, the 5 minute time frame, boom, displacement on the 1 minute, clear internal low to break even at. So I'm going to take this trade to go break even at the internal low and expecting price to flush below to these relative equal lows. All right, capiche, capiche, capiche. Place order. Bang. Bang, break even. Can we please flush so you guys can get a beautiful example? I don't like that wick, but can we please flush? I'm ending the video right here. I'm ending the video right here. I do not care. I do not give a fuck. You guys have. I'm ending the video right here. But you guys have a good example on how I trade. Geez, that is ridiculous. That is ridiculous. So that proves my point as well. Why do you always put your take profit a few points above the draw? Because that is ridiculous. But I'm done here. Hopefully you guys got a good idea on how I manage trades. Break even at internal lows and internal highs. Full take profit. I mean, I already went over everything, so hopefully you guys have a good grasp. And that is the end of my 5 video YouTube education series on how I trade. So now you guys have a good example and a overall good idea on the style of how I trade. Very simple continuation. So hopefully you guys maybe learn a thing or two, maybe implement some things on your own. And of course, if you want to learn from me, I teach trading one-on-one. I mentor. So if you want to do that, you can apply in the description down below. And if you want to count with Alpha Futures, code Jack will get you a discount. And then TikTok, Instagram, and of course, subscribe because I have bangers lined up for 2026. So subscribe, hop on the wagon of Goated Psychology videos, and overall, I do want to work into more vlogs this next year, but regardless, subscribe, and I'll see you guys in the next one.